everybody. It is Friday, February 26th. Got my cowboy hat on. How's everybody doing? Man, my head's spinning today. Up, down. Crazy day. Let's try to make some sense of what's going on. Hey, listen. What did I tell you? What did I tell you a few days ago? Everybody piling into that inflation trade. No good. No good. Right? All these Johnny-come-latelys getting in too late. Trade got crowded. You got a correction going on. So that's what's happening, and it is an unwinding of that trade, at least partially. It doesn't mean it's over. It doesn't mean it's dead. It is an unwinding of a trade which basically got crowded. A lot of people jumping in late, everybody jumping on the bandwagon of the, inflation. Now, I had that over a year ago. I said, you got to look at the fiscal flows. They tell you everything. And the flows are still very strong. So the larger macro trend, which is the growth trend, economic growth, probably, some price pressures, but nothing like the narrative that we started to hear. I mean, that narrative started to get crazy. You had that guy, Michael Burry, right? The big short guy, talking about German Weimar hyperinflation. I mean, that should have been a tip-off right there. So you needed to have a correction. Bond market. Let's talk about the bond market. I just checked the CFTC's Commitment of Traders report, which just came out a short time ago. Speculative activity in Treasury notes. The 10-year note, look, in the week ending, just this last Tuesday. So what was that? The 23rd? Yeah, February 23rd. Leveraged funds, those are like CTAs and futures funds, managed funds. They added something like 89,000 more short contracts to their position. Small speculators added 84,000 new short positions. So together, those two sold, like 170,000 new short contracts in the week ending February 23rd, and they probably added more right up until, today, when we had a little mini reversal of the downtrend. So, on top of the things that I've been talking about with respect to bank reserves, right? Bank reserves piling up onto bank balance sheets. They're making room for those reserves by selling some assets, treasuries mainly, and I did see some indication of that in the weekly banking release from the Fed that just came out also a little while ago. All right. So you got that phenomenon going on. Then you got the speculators piling on top of that, thinking hyperinflation because they're listening to Michael J. Burry. And that's what has, created this kind of condition where you see this big spike in interest rates and equity markets got all excited about that. But look, the underlying situation is still fiscal expansion. And that's a bullish thing. I mean, NASDAQ was up today. Gold. Let's talk about gold for a second because I made a video a couple of days ago saying gold was a great contrarian play. And I still believe that. We saw, in the week ending Tuesday, February 23rd, big time short covering by producers, gold producers in the futures market. And that didn't even include today. Today you had really like a wipeout, and I suspect when we see the numbers next week, the speculative funds, they liquidated big time, got out of gold positions. If you look at a longer term chart of gold, even though this month has been really ugly, and again, just on a side note, let me say for all of those people out there talking about wild runaway inflation and hyperinflation, Just look at gold. I mean, gold is still a very good barometer of inflation, and that's going down. That's going down. So most likely this bond thing is very close to an end, or getting close to an end. So gold had, what I was going to say is, if you look at a longer time frame, I mean, it's still very much in an uptrend. And I'm not just talking about technical charts. I'm talking about, the fundamentals, the underlying fundamentals, mine supply, demand, right? You got central banks still accumulating gold as part of a diversification of assets. That gets back to the whole de-dollarization thing. And let's talk about the dollar. Had a big, strong rally today. This is, again, a kind of a mini correction or a mini reversal of this hyperinflation trade. And I said yesterday, the dollar's not even going down that rapidly. I mean, it's drifting down. And if there really was some kind of runaway inflation, I mean, the dollar would be crashing, but it's not. Especially, you look at the fiscal expansion, you look at the trade deficit of the U.S., like the dollar, if there was real inflation, like crazy inflation, the dollar would be crashing. It's going down very slow. Where's the dollar index? Like 90 something, close to 91. I mean, that's, it's not like it's at 79, right? So here we are again, where all these things just, people get hysterical. They get crazy. You get a narrative that this is like the GameStop thing. This is like the Reddit, Wall Street bets thing, where everybody jumps on a theme and they go crazy with it for a short period of time. Everybody gets into it. It gets really crowded, and then the whole thing reverses itself. And actually, there was no underlying fundamental, or let's say very little underlying fundamental, at least to the degree that, people were pushing these markets. The growth scenario is there. The fiscal expansion is there. The U.S. trade deficit is there. I mean, these things are policy created. They are there. They're not going to go away. They mean something. Don't think they don't mean something. They do. You can make money off of these trends if you understand them. But everybody going nuts and like hyper exaggerating what's happening, that's just a recipe for losses for people who follow that. And most people do. Most people do. I mean, it's obvious. You can see it. Anyway, have a great weekend. I'm going to try to do some videos over the weekend from now on. I think I want to continue this on a 7-day schedule. I'll see what I can do. So have a great weekend. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Really try to understand this stuff. It'll help you immensely. Bye-bye, everybody. See ya.